afternoon, everybody. Thank you for being here. I know it's a difficult one. We are standing between you and lunch. But bear with us. We'll try to keep it interesting. At least the desserts will taste better with what we speak. So we have a very strong panel here, right? People from the industry who have been there, done that, doing it for years together. We are going to focus upon the first opening topic whenever you are lending, which is the digital KYC or the customer onboarding. The way we've structured this panel and the discussion is we'll try to dive into what happened in the past, how it has moved, and currently what we are doing, and what the future holds for it. So we'll go in that way. We can keep it interactive. If you have questions, we can take it at the end. So starting with, if all of you remember, I think if you take a loan, earlier days you used to give xeroxes of your PAN card, Aadhaar card, many such things. Then the guy used to tell you, self-attest it, you used to sign it. So those were the earlier days of digital KYC. The only digital part in it was somebody was taking a photograph and uploading it into the system. From there to what we have now, right? You put your thumb and you are digitally onboarded onto a platform. I guess COVID changed a lot for us. And to places where you can get onto an app, do a face match with Aadhaar. Technology has moved a long way when it comes to digital KYC. So, question to you, Nirmal. I think you had a credit company, right? So, it's a very important thing for you to ensure that the entire experience, customer experience, is good. So, if you could throw some light in terms of change from paper to digital, what were your key drivers? Why would you move digital? Obviously, we would all want to get there, but what are the key drivers for you to get into being completely digital on the KYC front?
Thanks. I think he rightly pointed out. I think we all have seen that taking Xerox, attaching it in the file, then we moved on to probably taking photos because mobiles came in, and then uploading those in the system. And then we also moved on to the OKYC piece, right? And of course, the future coming in on the video KYC part. So I would want to put it in a probably three-dimensional point of view. Take it from an organizational point of view. What are the key drivers? For me, operational efficiency, that is one. Gives me scale, that is the second. Gives me a cost advantage, definitely, yes, that is the fourth. From a access to digital infrastructure, considering how we've grown from a regulator, from platform also, where we get so much of access on the digital data, the ecosystem has evolved. So from an organizational point of view, these are the four key drivers that I feel that why we've evolved and what are the key drivers. Now the second dimension is from a customer point of view. Why would I do a digital KYC? It's easy, it's convenient, right? Why do I go and take Xerox when I can just get into the Aadhaar, OTP, and do everything on the mobile? That is the second dimension. Third dimension, I would say, from a regulatory compliance point of view. Now, from a regulatory compliance point of view, anything that comes from source and a government source, that's the best advantage that I can get, rather than me having a dependency on a human eye and then probably matching it. That we've seen instances in the past, right? OSVs were done, those were correct, obviously not right. Not all, but there were some instances. So these are the three dimensions that I feel that these are key drivers for us to move to and of course, like I mentioned, the digital ecosystem has evolved so much thanks to the government organizations, thanks to the regulations, thanks to the regulator itself. They are also helping everybody evolve. And these are the key drivers I feel that drive us towards a digital onboarding KYC part of it.
Great. If you could just introduce yourself, I think when I'm throwing the question, a little bit what you do.
Want me to do it now? Or?
Quick one, if you know.
I'm Nirmal Badale. I work with Credit Saison. What I take care at Credit Saison is the embedded finance piece. Embedded finance, when I say embedded finance, is typically the consumer digital business, where we integrate into a lot of partnerships who have customers and who are digital savvy. And then we provide finance through the partners app. That's what we do.
Great. So I think Nirmal mentioned that operational efficiency. He mentioned the cost part of it, and I think it's an obvious choice to move in that direction because it gives you the accuracy and the confirmation that you are actually authenticating the person who has submitted his KYC, right? Now, moving a little bit further, Chandan, maybe you could throw some light. It would be good if you could introduce yourself. How has the adoption been, right? It is all over the place, right? If we remember in the COVID days, पहले तो sign के बगैर काम नहीं होता था, right? You have to sign, otherwise you don't get a loan. In COVID, they took a video KYC and you were disbursed loans on a real-time basis. So how has the adoption been, right? You run a fintech yourself, and it would be good if you can tell exactly what you do. Everybody knows Muthoot as a lending company, so that would help. And what is the proliferation in an fintech like yours that you have been part of?
Good afternoon, everyone, and thanks, Siddharth. I'm Chandan Khaitan. I run the fintech business promoted by Muthoot Group, the Muthoot Papachan Group. When I say fintech, ours is a financial services super app where we do 4 categories, which is lending, savings and investment, insurance and payments. Now, coming to what Siddharth was actually talking about, and Nirmal alluded to it, it's been an interesting one, and I would actually try and cite 3-4 things here. Being a fintech ourselves, and we have roughly about 2 million users right now on the platform, and users come from 2 ways. One, we digitally acquire users, and second, the Muthoot customers who have been working with Muthoot primarily on offline side have now been acquired onto the platform. And that is where this journey has been interesting. And whenever we say customer onboarding, we always think of the whole 360 degree of customer onboarding. And that's where we have tried to break this subject into multiple parts of it. I'll give you one example. Imagine a gold loan customers being associated with Muthoot for many years. Okay. And now in a COVID and a post-COVID scenario wants to interact only through the bank account that doesn't want to transact less than 20,000 rupees in cash. So what we did actually is we took the only bank account addition as the part of customer onboarding onto the platform that, sir, you are our customer in any case, now you want to do it. We make it very simple through either penny drop or just put your mobile number, we get the VPA ourselves, and you can add your bank account with ourselves, and then you can transact very freely. So that's one way of doing it. That's how we break it. The second way we broke it actually is because we are a multi-product platform, we have products from loans to Forex to NCDs and everything. The second thing what we did is we actually broke customer onboarding depending upon which product we are talking about. Let me give an example of NCD as a product. So our group actually issues NCD. Earlier this NCD used to be on a paper, sign karo and all of those. Correct. What we have done is we have made it very simple for a customer to do the PAN verification, the UPI mandate creation, and you are done. And Siddharth was talking about the future of it. So as we speak, we are integrating AA on top of it, which takes care of that particular piece as well. We know most of it, the things you have, and it will be a less than a minute journey for you actually on the platform. So that's how the whole past, present, future. The next thing which I'll talk about is, and this is one piece which we do a lot, a term called DOTO, which is Discover Offline Transact Online or Discover Online Transact Offline. And that is how this whole customer onboarding becomes very, very interesting. Like take example of Forex. We are one of the largest 82 license holders in the country. And Forex is a very unique product all of us have taken where we need those Forex to be delivered at our home, but we don't want to do the paperwork actually. And we have made it very simple through the whole public-private partnership which Nirmal was talking about, that you come to our platform, do the whole customer onboarding in a very seamless manner, your order is created and the Forex gets delivered to your home, which is your discover online, transact offline, and you can do vice versa as well. So lastly, I would say if I were to summarize the whole thing, and I would actually borrow from what Nirmal was saying, at the end of the day, technology and this whole phygital mindset, because you need to make sure that you serve the customer whenever, wherever, and however. If you think of that, there are three drivers which I would say. One is the customer experience. Sir, please do things which I want you to do. Don't tell me that this is how you do it, I need to adapt to it. That's not gonna, the way world is gonna work. So customer experience absolutely is the prime. Second is the whole cost efficiency part of it, because it all gives you cost efficiency. And lastly, in a market like India, which is gonna continue to be a phygital market, and you have people on the field which are costlier, how do we utilize or make them more productive using the right technology? Correct. So these have been actually the driving factor for us, and these are the ways we have been actually doing it.
If you could just, for the benefit of the audience, you mentioned the word AA, right? We learned Noto from you today. So if you could just throw some light what exactly that is.
I think this audience is absolutely educated about AA, which is account aggregator. And account aggregator is creating beautiful rails, which is basically a public infrastructure. We can use AA to do multiple stuff. Like for example, what I talked about NCD. So account aggregator is a public infrastructure which rides on top of the whole banking infrastructure, which also rides on top of multiple other infrastructure, which includes the whole demat account transaction as well. So on NCD, if we actually write the AA rail, many of the UPI ID which we take to do any such transaction, we can actually just take the UPI ID and get most of the details about you and make the journey even more seamless. So that's how the whole world is moving.
Fantastic, fantastic. So just trying to build it further and trying to tie the whole thing together. From paper, we moved to digital, and it was majorly possible. I think the madam from NPCI showed us some amazing numbers in the morning. It was mind-boggling, those numbers that we have. I think the digital infrastructure, so I think Chandan even touched upon the second part in the customer onboarding, is that once you take a loan, they need to dip into your account and take the EMI. That's the core of it, which is authenticating your bank account or for even disbursing the loan. So where he mentioned a penny drop, right, which means you put your account number or your mobile number, and from that they are getting the VPA. So this entire infrastructure of the Aadhaar, the PAN verification, and everything being available online, as well as the complete process being tied up. I think that is what is driving the adoption, and it is moving at a very frantic pace. I think as we speak, we are already talking about account aggregator, which means a single person will manage multiple of your accounts, right? Which was like a far-fetched idea, right? We were even on a single app to get your FDs was like a big challenge in the earlier days. So that's a far, we've moved much further. As we adopt technology, there will be risk involved. Okay, there will be, definitely there are rewards in terms of, we already spoke of cost optimization, we talk about operational efficiency, customer experience, but there are risks involved, right? Anything that goes digital, okay? Nalini, you represent Digit. We were chatting and she told me I'm a non-techie in the group. So you are the best person to tell us the adoption of technology. What are the risks involved? And, maybe if you could throw some light on exactly what you do at Digit and explain us how you guys are looking at it and trying to mitigate those risks.
Sure. So I think when we're talking about risk management is very important, and there is no choice today that you have to be digital, because the rewards outweigh the risk. So there is rewards to be unlocked for everybody. For the service provider, it is cost efficiency, it is access to market. We have seen when we started Digit, we thought that since we are a digital company, so most of our customers would be coming from tier 1 cities and the educated, middle class, upper middle class, this is the segment I would be catering to. But after around 5 years, when we looked at where are our customers coming from, we realized 2/3 of our customers come from Tier 2, Tier 3 and Tier 4 cities. Only 1/3 come from the Tier 1 cities. And that's because the agents who were working in Tier 3, Tier 4 cities, for every transaction they had to go to the branch of the insurance company. With Digit, our app was like a super branch. So you can take quotes, you can give policies, you can register a claim. So they felt very empowered. So I think digital is very empowering to the customer. As they say, empowerment comes with responsibilities. Risks there are a lot of risks which this infrastructure, this entire ecosystem throws up. So the most important one is the data protection. So we are accessing data from multiple sources, from Meta to, we are storing some kind of data, customers identification, and RBI interestingly realized that the regulations which they are doing is typically for banks and NBFCs, and the way fintechs are operating is completely different than the financial infrastructure India had. And kudos to them, they have come up with a working team which would be regulating fintech. And we are seeing a lot of regulatory changes which are coming up. So I think the risk is one, the changing regulatory environment, data protection. And what happens is that in digital you have to build to scale, because when you're talking about brick and mortar, your growth will be in arithmetic progression or geometric progression, but in digital it is snowballing. Once you get it right, then the numbers are going to be very huge. So if you don't build your systems to scale, then you're set up for failure.
Yes, makes sense. So you mentioned the risks on the side where the data protection and all that. Probably we'll touch it later in the conversation if somebody wants to pick that. There is the other side of the risk where the frauds happen, digital frauds happen, right? There is identity that is misused, which becomes easier in digital. Physical, at least the person has to walk in, you are verifying the person. Obviously, there are frauds that happen on that side as well. We'll pick up probably later in the conversation. You mentioned a very important point in terms of regulations, right? None of us can survive, right? Everybody in the fintech industry. We have to all fall in line, and we have to ensure, we have a responsibility to ensure that the data that is there with us is secure, dealt in the right manner, stored in the right manner, right? So, Vipul, you are with HDFC and you handle startups and people to be onboarded. If you could throw some light in terms of how do we navigate these regulations, right? Quite a few fintech founders are here, and quite a few people from the lending side are here. Day by day, it is becoming difficult, right? Probably because at the speed which lending is happening, it needs to be done in the right way. There are a lot of upgrades in the way RBI has placed some norms. Some of them being as simple as, like, I think everybody somebody mentioned you were taking photo of the Aadhaar. We all forgot to mask the Aadhaar when we were taking the photo, right? That was one of the RBI regulations that were there. So those type of risk, right? So that now the Aadhaar is exposed in the image in your system, right? It may be encrypted, but when it opens up, you have the Aadhaar exposed right there and there. So there is I'm just giving you an example. There is a RBI regulation which says that you have to mask the Aadhaar when you are taking it the first step, so that across your system it is not exposed anywhere. So how do you, like yourself being such a big bank, how do you guys navigate and manage this in terms of the regulations, and if you could throw some light of what's coming up?
Absolutely. First of all, thank you so much for that question. Very relevant. Good afternoon, everyone. My name is Vipul Saini. I basically work on the startup product side for HDFC Bank, looking at all touch points from the startup ecosystem perspective. Also working on developing new products for the gig space and on the cross-border payment side. And before I start, I would also like to, just say hi to Aakarsh here, who's from RBI Innovation Hub. I think very relevant from a regulations point of view. I'll dive into, why that is also important. But it is very heartening to see, a room, where we have fintechs, we have banks, we have NBFCs, we have representatives from RBI Innovation Hub, together talking about this particular space. Why I feel this is important and how this shows growth over a couple of years is that about 5 years back, when we were working in this particular space, a lot of work was done in terms of building competencies and relationships with NBNCs, fintechs, startups, where banks were predominantly talking about what can be done for a particular collaboration under the regulatory norms that were prevalent at that point of time. The reason that was important was because way back in 2017, Kotak Bank had actually introduced a payment gateway system on Twitter, but we could not launch it to the market at that point of time because there was no regulations around it. And at that point of time, the team internally realized that it's a collective effort towards building a solution, not just one-term approach in terms of building something. And if you want a solution to last, you need to have all the players involved collaborating and working together to be able to build it at an ecosystem level, at a similar playing field. And with that conception in mind, we started talking and working with fintechs. We obviously had our agenda where we were looking at certain technologies that we wanted to implement. I think in the last 2 to 3 years, the banks have realized that ease of use is one of the biggest factors for our customers. And some of the fintechs have done that fantastically well, right? Banks predominantly, because of the way they're structured, there were legacy issues that were being faced in the old technology. We wanted to get to the newer technology faster, but the only route to be able to do that was, in terms of collaboration. And what we did at the banks were that we created a dedicated document in terms of how do we collaborate with fintechs, what is the role that regulation plays into it, and how do we have a conversation where we can fast track that deployment within the banks. In fact, we have a dedicated documentation process for each vertical in ShoreTech. Then we're looking at documentation, then we're looking at KYC, we're looking at multiple other things. So we've defined steps that as soon as somebody comes in, this is the person or this is the team that they'll be connected to. They will clearly define what are the new regulations, under what sort of regulations can we experiment, do POCs, and probably try something new, and what are the stable ones that we can already look at. So with respect to the example that you shared, in that particular space, we were looking at, if a team wants to do a POC, this is what is available today, and this is what we would probably want to showcase in the next 4 to 5 years. So we are also experimenting with ideas where we can take photographs and identify, what sort of behavior or user pattern does a person show. Now, it seems a little out there, but we know that with people walking into the ATMs, using digital KYC, we need to be able to better map, where they're coming from, what are they doing. Plus, you're also trying to figure out alternative ways of identifying and building a sort of background to a person. Now, predominantly, a bank doesn't do that because we don't have the wherewithal to be able to do it. But we are partnering with fintechs and other organizations that are looking at that, from a solutions perspective. So that's what we are predominantly doing. And what we also very keenly do is that whenever we have, something, a new idea that pushes the envelope, that's where I approach Agarwal. And I'm like, Agarwal, we need help with this. This is something new. We want to experiment. What can we do about it? And it's very heartening to see, how the regulatory bodies are now open to those ideas and conversations as well. One of the key areas that we've been talking about recently is that if an organization comes to us and says, we have an AI/ML sort of a solution available, this is our accuracy rate. How do we do that as a POC? We can't share customer database. The customer database that they're using may or may not be validated. Correct. So we, showcase that as a concern to RBI Innovation Hub. They're working on creating a sandbox, which I would let Agarwal elaborate on it. And that's how we're looking at it. So we are becoming a good medium to say, this is a problem that we are facing. This will help get there faster. Let's work together. These are the regulations that we can help you with. Understand them a little better. And then on the other side, and this is the term I love sharing, it is a spirit of compliance. So we work on those grounds. So we say, hey, this is the spirit of compliance. This is probably how much we can push an envelope on. But for everything else, we go back to our dear friends at the regulatory.
Great. So So that's an interesting one. Spirit of compliance. You made it very light for all of us, right? Uh, if you have to move from there, right, in terms of you mentioned about having standardization in terms of the regulations, and if fintechs approach a bank or probably a NBFC, you kind of standardize the onboarding part of it, which is in line with the RBI regulation. An interesting thing that we picked up, probably we'll delve a little bit more later in the conversation with Aakarsh, is that now we were saying that the industry and the RBI is collaborating on future problems or current problems and how we can navigate those, right? Which probably was there earlier, but I'm assuming the pace and the interactions have increased. So probably we'll come to that. We'll little bit switch focus and go to the consumer, right? We're all here because the consumers manage to take loans, do their KYCs, pay back their EMIs, take insurance, right? So we're all in that business, right? So the Sumoth sir, question to you in terms of consumer centricity. You manage a portfolio. If you could throw some light to the audience at Federal Bank, right? In terms of the consumer centricity, right? Whenever I am onboarding a customer, there is an experience that we need to give to the consumer, right? It can't be very patchy. At the same time, you may want to restrict on how much information you are taking from you will take exactly what is desired to disburse the loan or give the insurance or whatever. So, in your experience, how has consumer centricity been taken care of? Your experience in the industry as a large.
First of all, myself Sumoth. I had the fintech partnership vertical of Federal Bank. By fintech partnership, what I meant is that we tie up with major fintechs in the industry who helps bank to onboard customers through their platform. So basically, we have concentrated on three basic verticals: liabilities, credit cards, and PL. So we normally call it as an inorganic type of acquisition for the customers, not through our branches, not through banks, digital channels. We take or we partner with those fintechs. Normally, there is always a conversation whether fintechs are a competition to the banks. So normally, Federal Bank considers fintechs as not as a competitor, but as a collaborator for our customer acquisition and onboarding journeys. So that's a vertical which I heard. Coming to Siddharth's question. So maybe recently I had read an article where it mentioned that for a digital financial product, a prospective customer maybe researches 7 to 10 portals or websites before taking a final decision to which product or which institution I have to bank with, I have to go for. So there I take what Chandan was telling, Dotto. I'm twisting a little bit, not twisting. It's maybe discover online, transact online. So that's the philosophy Federal Bank is always telling. So once a customer comes to Federal Bank's platform, then it's our responsibility to ensure that he completes the journey and takes the product.
Correct.
There should not be any drop-off. So
Correct.
there the experience or the onboarding experience comes into the picture. So we have designed certain journeys, maybe I'll quote one or two examples where I designed, to ensure that the prospective or the customer maybe enters as few data as possible. Whatever data available in the bank system or available with the regulators or with the entities in the ecosystem, we push the data, just get a confirmation that yes, this is the right data, and complete the journey. For example, Federal Bank didn't have its own credit card maybe 5 years back. So we had co-brands with some other larger institutions. So when we decided to introduce our own credit card, the first digital philosophy with bank chooses, we will not have any physical paper application form. Till date, we don't have any paper applications for our credit cards. It's an end-to-end digital journey. If it's a pre-approved customer, the journey ends in 3 clicks. So with the 3 clicks, the customer just confirms his credentials. Of course, as Nalini was telling, authentication, risk mitigation, all those measures are there. Authenticates himself or herself. He gets the digital card in his Fed Mobile. We call our mobile banking platform as Fed Mobile. He gets the digital card instantly in his Fed Mobile and he can transact immediately online. So we ensure that the product immediately customer gets and he transacts also immediately. So that's one thing what we have done. The second one I just quote is that along with the organic channels, what we thought was that rather than waiting for a customer to approach the bank, we should be present where the customer is.
Correct.
So that's a philosophy where we introduced WhatsApp banking channels. So we introduced our pre-approved personal loans and pre-approved credit cards through WhatsApp. So within 3 or 4 chats within the WhatsApp, the product gets delivered to the customer.
Correct.
So yeah.
Yeah,
Yeah,
yeah.
I thought you were asking something. Yeah, so we ensure that the customer never went out of the particular channel where the customer is. He completes the journey and gets the product, and he transacts also online if possible, depends on the product. So we ensure that the customer experience is seamless. That's one side, because I don't know, I read some article, maybe you have a different view. What do you think the attention span of a Gen Z or a millennial right now in the digital world? Can anybody tell? Yeah, 3 to 5 seconds is the attention span right now the persons are having. So within the 3 to 5 seconds, we have to get the attention.
What will you sell in that much,
At least we should get
You
the
wouldn't be able
attention.
to explain the product itself.
So that's getting the attention and making him stick on to the platform is very important within this 3 to 5 seconds. So that's how the journeys are designed. So that's
You are
one
basically
side.
saying engaging, keep him engaged and give him the convenience that the first 3 to 5 seconds he is convinced that he's going to have a smooth experience.
Exactly.
Otherwise, he's out of the
Exactly.
journey.
So that's a challenge we are all having in this hall. So whenever you design a product, that has to be always kept in mind. So along with this product which I explained, we, as I earlier mentioned, we also having partnered with multiple fintech partners who take this customer experience onboarding to a different level through gamifications, through other channels. So there also we partners with those fintechs who help us to get the customers through those onboarding channels, where the customer comes to that particular platform, completes the journey, but we are exposing, Federal Bank say around 300 plus APIs, which we are exposing to the partners, depends on the products. So all the onboarding happens in the bank's platforms, but the front ending will be done by the fintech partners. So that's in short, I just want to.
Fantastic. So, Aakarsh sir, coming to you, I think Vipul gave us some insights. I think they've been in touch with you. So when it comes to customer centricity, if you could add on to what we heard from Sumoth sir in terms of compliance and customer experience, both going hand in hand. If you could touch base and if you could throw some light on terms of the industry interactions, what does RBI has? If we could all be enlightened, what's possible, because it's a tough one for us to crack always. So probably it would help.
So thanks for that question, and I've been looking to share more about what we are doing at the Innovation Hub. So quickly, I head the FinTech and Startups vertical for the Reserve Bank Innovation Hub. RBIH is a subsidiary of the RBI to accelerate innovation in the financial services sector. Our broad mandate is frictionless finance for 1 billion Indians. In order to achieve this, we believe that there are 2 critical factors. One is customer at the center, because customer centricity is key in order to achieve sort of a digital financial inclusion in a diverse demography. That is something that we look at, and creation of a digital trail is a must for anyone who's new to credit or has a thin file credit to access loans, so to say. With this kind of thesis in mind, the FinTech and Startups vertical was established primarily to bridge the gap between FinTechs, banks and the regulator. Correct. To be able to work together to accelerate some of this innovation and take it to the market. And that is where our role becomes quite interesting, wherein banks again have the wherewithal to accept deposits, lend to the customers, whereas fintechs are high on customer centricity, innovation. Right. So how do we marry the both, and how to also ensure that the experience is regulatorily compliant is something that we are doing through several of our initiatives. We've run several accelerator programs to that extent, where we've had bank fintech matchmaking. POCs are a specific outcome of the programs that we run with a lot of banks. We have conducted several industry roundtables with banks and fintechs, as well as VCs, to understand how we can produce scale. And we have also, looked at various initiatives in the pre-incubation, incubation, and acceleration stage, so that at every stage the idea is validated, problem statements are given, the industry is working towards certain areas that are of critical importance. Now, moving on from that into more specific examples of how we are looking at digital onboarding or enabling, accelerating the process. Hyper-personalization is key to digital onboarding, because each customer is different, each, their persona is different. They could be a farmer, they could be an MSME, a woman, a person with disability. Each one has a different way of accessing the banking and financial services ecosystem. So we have, come up with several initiatives where there was a close collaboration with fintechs and the regulator as well. To give an example of digital SHGs. So traditionally, the self-help groups have been, doing the bookkeeping in a physical format for almost since its existence, because of which women were not able to access the traditional credit from the financial services, and therefore they had to deal with higher interest rates, reaching out to the informal credit ecosystem. So in order to solve this problem, we enabled a digital trail where the onboarding journey of the SHGs was made digital, and as a result, the transactions were getting captured digitally, and now the loans are disbursed in a matter of minutes, to the members, and individual credit history of each member of the SHG is tracked. Similarly, there was the Kisan credit card that was already in existence, but our team went onto the ground and identified that there were almost if not 100, but several pages of paperwork involved for a farmer to access, and at least 5 to 6 bank visits, and minimum 6 to 7 weeks to access a loan of 2 lakh rupees. So we said that this entire process has to be digitalized, and we tried and understand. So they were repetition of several questions of the same kind. We reduced the number of questions, made the entire process digital, and now to cut to the chase, the digital Kisan credit card is able to disperse loans to farmers in a matter of minutes, as opposed to the number of days, weeks it used to take. And just one or two more examples, we have run an innovation challenge called I Innovate in partnership with HDFC Bank, the Parivartan Grant Scheme. So where we looked at startups solving for financial inclusion for people, people with disabilities or specially able people. How do they access traditional banking apps? As simple as screen magnification, voice input, to even a call center for people to people who are unable to speak to actually reach out and use sign language to interact with customer service, etc. These are audit for how friendly your banking app is. This is not just a social impact aspect that we're looking at, but a business opportunity for banks and FIs to onboard a new set of customers through this personalization. And finally, in terms of onboarding, we are also looking at vernacular. There's a startup called Devnagari, part of our cohort. They translate all these apps and banking apps in 22 different Indian languages. You're able to access a new demography, new customers segment. We're also doing a project called FinTech in Northeast, where we're looking to have financial inclusion of people in the Northeast region as well, and also looking at things like bots, voice-based bots. So now you're seeing a lot of the technologies coming together, the natural language processing technologies, voice, AI, ML, as well as the vernacular content, all coming together to deliver a customer onboarding experience. But yeah, I mean, there's a lot that we could get into, but just sort of concluding some thoughts that the opportunity for fintechs and banks lie in 5 C's that I've talking about. One is customer onboarding. The other is credit underwriting. The third C is customer service. The fourth one is customization of financial products. And the fifth C is compliance. So these all present some opportunities for startups to work on, and we are actively accelerating the journey of various stakeholders in the ecosystem. Thanks.
Great. So I think you gave us a very different angle to how we know RBI, right? So you are actually trying to help. What probably we could summarize is a lot of your pointers were towards going to the underserved or unserved segment as well, which are being out of the credit system majorly due to either the access to it or the way they maintain their records. So you mentioned the SHGs which maintained it offline, which now is actually like I think like a revolution in India, right? The SHGs, and I think the government has mandated some percentage to banks and NBFCs to lend to that group. So you gave us a very interesting angle to RBI. I think we should all thank you for that. Now you want to add
I
something?
just want to add something because I missed to mention that when we talk about customer experience, customer onboarding, we had to always thank the regulators for, especially on the eKYC guidelines, VKYC guidelines, digital lending guidelines, which help the onboarding guidelines. And plus, since Agarwal is there, I have to tell that even RBI Hub is helping a lot for the financial institution to onboarding through the APIs, which the entire ecosystem. So I thought I just want to add this point.
So it is great. We all here RBI has find X bank, Y bank. Good that we are all appreciating right now the support that is happening over there. Now moving to the center, I think Souparno has been quite probably. If you could, probably just help us understand what you do, and we would want to get to the next step. We discuss regulations. You run a fintech yourself. What do you expect the future of these regulations? So it is maybe the challenges you are facing, or probably what do you expect how it will move? From your perspective, industry perspective, whichever way you can bring it.
Sure. Firstly, thank you. Very good afternoon, everyone. Again, just to give a perspective, I'm Souparno. I'm the Chief Operating Officer for a fintech called Balancehero. We are both into payments and lending. So what that means is we are a perpetual PPI license holder. So we have our own interoperable wallets, and on the other side, we are into lending. We are primarily into unsecured lending. Now, in the context, I'll share some data points in the context of the agenda and the conversation. So just focusing on, let's say overall, we have around 3.2 million, that's our MAU, monthly active users. And we are totally digital. I mean, we are 100% digital. So as you would appreciate, there is a spectrum, right? You have physical going to automation, then you have a phygital model, and then you have a 100% digital model. So to Chandan's quote, right, we are like discover online, transact online, that part, that side of it. Now, in operating parameters, just to give you a flavor, so on any given day, let's say lending, I talked about MAU on overall basis. On lending, we do more than 10,000 fresh disbursement of fresh loans every day. So as I speak, maybe from morning to now, we would have already disbursed 7,000 loans. What also it means in terms of reachability, the point which Nalini also was mentioning. So let's say till 2 years back on the digital lending side, you would have had approximately the industry operating at somewhere at a 50-50 scale, in the sense tier 1 50, tier 2 and beyond, it's like 50% in terms of customer spread. Fast forward to today, I'm talking about lending at an industry level. The majority, let's say 60-65% is tier 2 and tier 2 plus, and then rest of it is in tier 1. Our data, like the way we are positioned, we are primarily positioned to solve for the Bharat. So 85% of our customers actually come from tier 2 and tier 2 plus, which means not the top 8 cities. Which also means in terms of PIN codes, I'm talking about we servicing 97% of the PIN codes in India. Any guesses how many PIN codes are there in the country? Yeah, it's like 19,000 or 19,100. So we are talking about that scale with the spread, and as also was mentioned, right, we are talking about Northeast, we are talking about the far spread of India, which wouldn't have been possible without digital onboarding. So that's the ground with proper data. Now, coming to the question which you had. So we had and we touched upon, right, the journey has been both enabled by technology and as well as also facilitated by the regulations. This has also helped fintechs, hand on heart, to rewire in many ways. because you also have to appreciate, like, if you have FS DNA for 20, 30 years with a lot of banks being there, I also must accept that many a times the fintech DNA is a lot more indexed towards a technological mindset. Now, what I am calling out, because the rewiring also has happened thanks to collaboration with regulators, thanks to some of the evolution which has happened, the rewiring has happened that regulations are not speed bump, they are guardrails. Now, that's for sure that rewiring has happened. Now, translating that, let's say digital lending guideline, translation of that also had meant that we have to look at the consumer at the center, but also from an ecosystem play. Let's say on an onboarding, what is currently happening. Our consumer, including us, we all know we do go and do I agree. How many of you actually go and read the terms and conditions? I don't. So that's where the regulation has come in, right? Clearly calling it out, like what are the do's and don'ts. So that aspect of consumer protection has helped. Then there is also aspects of where you are saying that the ecosystem has evolved. Now today we are talking about not only regulated entities. We do primarily from 70% of our business from our own book, own NBFC. So we are taking the loan on our book. But let's also face it, we do 30% of our business collaborating with banks and NBFCs. Now we are talking about KYC, now we are talking about the data coming in. And therefore, some of the clarification which regulation also has come in post the digital lending guideline has actually clearly called out who is the custodian of the data, how the KYC has to be mandated. Now, fast forward a little more, what's going to be critical, and Nalini touched upon on that point, is the intermediary creation, what we call as SRO, the self-regulatory organization. This is going to be possibly pivotal. Because from here to there, if you think about the regulations, there are certain aspects on the liability side, but more importantly on the consumer side, we are talking about both prudential risk and conduct risk. Our regulatory framework has evolved a lot on the prudential risk part of it. But when it comes to consumer onboarding, digital onboarding, the conduct risk part of it is of paramount importance. What is that we are doing with the data, how we are actually landing up on the collection side, and more importantly, there is the verification issue. It's not only about impersonification of a consumer's information, it is also about impersonification of the provider information. Today, if you actually, I'll not quote names, but if you actually go to the internet, you will find a lot of ABC. Maybe there is a bank ABC and then there is 10 other portals. So thankfully, we are also working with the regulators on those lines, how to whitelist apps, how to whitelist portals and then act around it. Already with regulations, RBI, regulator RBI and Google, we are on the works of it. But the key point is to be a dialogue-driven process so that the SRO is going to be important. And one other point I would also want to call it out that at times we are looking at fintech as a monolith, which is not the case. Because you have insurtech, you have lending, you have payments, everything put together. And more importantly, when it comes to onboarding, you have business and you have retail. We have come a long way on the retail side of it, but when you think of MSMEs, when you think of the opportunity, I think that's where, again, the regulations also have to be a lot more enabler. So I'll pause there.
Great, great. So we would love to hear more. I think we are short of time. We can't be in Bangalore and not discuss innovation and disruption. So Nalini, I think you could do the honors and tell us where we are. We have a very few minutes left. I think the clock is ticking.
I'll take
We will have time for
50
questions
seconds,
after that.
40
right?
to 50 seconds.
After this, okay, yeah. Yeah.
Okay,
Quick
so
one.
I'll not
Yes,
take more
yes,
than
yes.
40 to 50 seconds. So I think my co-panelists have covered most of the things which I had prepared for. So I was constantly updating what I wanted to speak, but most of them have spoken. I'll just summarize what we spoke from an innovation and disruption point of view. The first thing which my co-panelists have already spoken about is one, vernacular. So you will see a lot more communication which is going to come in vernacular. Second one is movement from personal lines of finance to commercial lines of finance, because today more or less 95% of personal loans are digital. But when you look at MSME loans or working capital loans, they're still very phygital, I would say, may not be completely physical. We're going to see a lot of action in that space. We were talking about hyper customization. So when we talk about customization, we always think product customization, but I think with the data available, the metadata, the data, the customers, digital footprint, there will be customization on pricing as well. So I may be getting a different rate of interest when compared to somebody else in this room, though our profiles may be similar, the kind of loan, the tenor is the same, but based on my behavior, I'm going to get a better price. Lastly, as they say, Sangat Chatvam, all of us on this panel, we feel that we are not competitors. So co-creation of product becomes very important because, whether it is Souparno or Chandan, they understand their customers, what is their activity on the app, what are they looking for. And as an industry, if we start coming together and start creating products which cater to those customers, we will see a lot more adaptation. And gamification is another thing which we will see. I was discussing with a few other fintechs, and they were telling people are very interested to see what is their credit score, what is their sleep score, health, finance, security score. This will offering hyper customer products and pricing, I think, is the next big innovation space. And we will see an emergence of a super app where, people, whether they're doing investment, they're doing, insurance, buying, lending, all these things will come into one super app. That's
great. So I think I'll summarize at least that we heard DOTO today, DOTO, I think two different meanings of that. We heard SRO, self-regulated organization. That was, I didn't have time to delve more into it, unfortunately. We ran out of time. And probably you could repeat, I didn't pick up the term, altogether, doing it all together, right? I know Vasudeva Kuttamu, our dear Prime Minister, has taught me that very well. So, thank you everybody, and thank you for the patience of listening to us. We will have time for a few questions you have. Okay, we've been restricted to one question because we stand between you and lunch. So any questions to the panel generally? Thank you. Thank you.